I was like, yes, these things are amazing. Everybody should have one of these if they're running a business, but especially Amazon FBA sellers. If you're dealing with product, there's a lot of cash going in and out in larger and larger sums as you grow. And it's really handy to have that in front of you when you're making a really big transfer to a supplier overseas.
You're listening to the Ecom Exits podcast with your host, Nate Ginsberg. Learn the best tips and tactics to improve profits, cash flow, and maximize your e-commerce business value on the way to a successful exit. Welcome to the show.
Hello, podcast listeners. It's your host, Nate Ginsberg here. Today, really excited to talk with my friend, Ben McAdam, virtual CFO, profit coach, someone who I've actually joined some of his workshops and learned a lot about some really great tips to find more money in your business. Looking forward to diving into the interview with him now. So Ben, thanks for joining us.
Thanks for having me, Nate.
So first, could you explain to the listeners a little bit about what it is that you do? What is a virtual CFO, and when or why would somebody consider bringing one on?
Sure, happy to. So I have been doing this for a while now, and I was calling myself a virtual CFO, and I realized that a lot of people don't know what that means, and the people who do know what it means have a different idea to me. There's a lot of different ideas out there. So I started calling myself a profits coach instead, which is kind of like, it's an easier to grasp concept. I'm basically a business coach that will focus on your numbers and help you grow them, help you grow more profitable, help you sell your business for more, that kind of thing. And it's definitely a coaching thing. Virtual CFO, to explain a bit about what that is, I better start with what a bookkeeper is first.
And I'll admit, this is, I'm still just kind of grasping my head around the difference and the different roles of a bookkeeper and a controller and an accountant and CFO. And yeah, it would be great for you to kind of break down maybe what each of them are and their roles and how they play together, like which ones are going to be able to maybe help you find profits, which ones, get you on top of the things that you need in order to have an exit.
Awesome. Happy to go through that. Okay. So first it starts with the bookkeeper, because everything the bookkeeper does, the other roles build on top of. The bookkeeper is like the scorekeeper at a sports game, or like the dashboard on your car. They put the numbers into a readable format, but they don't necessarily tell you what they mean or what to do about it. But a bookkeeper will save you a lot of time, and it's one of the first hires I suggest a rapidly growing business does. And if dear listener, if you're somewhere near 6 figures of revenue and don't have a bookkeeper, go get one, because it's something that you shouldn't be worried about doing for yourself. So that's kind of assembling the transaction from bank accounts, credit cards, Stripe, PayPal, all that, and putting them into a report or into an accounting system that can generate a report for you. So it's the bookkeeper's role is like compilation.
Yeah, that makes sense. And then that's stuff that Sellerplex works with businesses to help get the books correct and cleaned up for an exit. And we see stuff of a lot of times of people not doing it correctly, and then they come to us, and then we end up having to redo, the last year or sometimes, 2 years of books. And so maybe if you can talk about what are some maybe common mistakes that people make when hiring a bookkeeper, or common mistakes that you see bookkeepers making that could mess up the foundations of this accounting and finance house for your business.
Yeah, absolutely. So bookkeeping becomes easier when things are clean and when it's easier to go in and find out how the numbers in the bookkeeping system got that way. And so whether that's, just a spreadsheet or whether that's an actual piece of software online. So like big bookkeeping mistakes are things like not putting names against anything. So most bookkeeping systems will allow you to record the name of the supplier that you paid the money to, a little description, as well as putting it towards one of the accounts that will appear on a report. And adding those two other pieces of information can be really critical for when the business owner is looking at this report and saying, that number looks a bit off somehow. Can we have a look at the transactions that make up that number? and then you have a look at the list of transactions, and there's no extra information there to help you figure out where that number came from, whether it's correct or anything like that. So
You're kind of stuck because the whole point is it needs to be correct. And in order for it to be correct, you need to be able to verify that it's correct. And if you don't have the appropriate classification or tagging of the things, there's no way to check if it's correct. And then, I mean, it's basically worthless.
Yes, you've wasted a lot of money and time. Yep. So the other thing that's useful is a common mistake is there's a lot of online bookkeeping software that allows you to set up rules so that if it sees a certain text on a transaction, it will automatically allocate the transaction for you. And yay, you don't have to do that bookkeeping. But if you don't set those rules correctly, then you can do your bookkeeping wrong at scale instead of saving yourself time.
Yeah, and I think that that's stuff that we see sometimes when, you know, we're working with the business to like get them prepped for an exit, and it's not that like they've been doing bookkeeping, they've been paying a bookkeeper or have a bookkeeper or whatever, but you know, through some combination of these things, like there have been things that have been done incorrectly, which just, you know, basically we have to start back over and, you know, redo everything, which I mean, not ideal. We're happy to do it, but
yeah. There's one or two others I just want to mention before we move on that I think are pretty important. In the beginning, you can kind of put an expense to any category that you want, and it almost doesn't matter that much if all you're doing with those reports is sending them to a tax accountant so they can lodge your return. But for e-commerce, Amazon FBA businesses, any product-based business, really, it's critical that you get the COGS calculations correct, your inventory calculations correct, your shipping and everything goes into the right place. And ideally, you want to take it a step further and do like reporting per SKU or per product so that you can see the profitability and the margins for each of the products. And I know that's something that Cellarplex does really well. So I'm preaching to the choir here.
Yeah, no, I mean, that's, also stuff that we see, and it's like, you know, I know a lot of FBA sellers there's different, there's different software that can give you pretty good, you know, cost of goods and profit, and like, you know, with those you can get quite close. You can get a really maybe 90% or even 95%, but you know, when you're getting ready for an exit, like 95% correct isn't good enough. You know, you really need it to be on point, and yeah, the cost of goods is something that, like, it's a pain. Like calculating it, you know, calculating it after every shipment, like it's not, I mean, it's not super, you know, fun work that you have to, you know, keep redoing and updating. But it's important if you want to have, I mean, especially if you're aiming for a 7-figure plus exit, you know, the bigger you get, the more, the less flexible, you know, really, I think you can be with any of these things. And yeah, so agreed. And thanks for pointing that one out. The, you know, making sure cost of goods is correct and updated. I mean, yeah, through the historical period.
So that's the bookkeeper. That's what they do and what they hopefully should be doing right and not wrong. The next player on your accounting team is an accountant. And normally people say accountant and they actually mean tax accountant. That's just, you know, we say things faster. So a tax accountant, they're the one that obviously lodges your annual income tax returns and any state tax filings that you need to do. But they become super duper important around forming and selling your business. That's where they really save you the big bucks. And like when you're negotiating the sale of your business, you should be talking to your tax accountant a lot, because changes in the negotiations could have a big difference to your after-tax amount of money that you actually get from the sale.
And so just to kind of confirm, so you were saying that, so the accountant, they're like, I mean, aside from the, you know, annual filings of tax or whatever, really, really important, like the most leverage pieces of what they're involved with is around the company structure and setting it up, as well as around the exit. And guessing why you say that is because those have the biggest cascading tax ramifications, you know, down the road. So it's like you got to get those I mean, the structure set up in an ideal way at the start as well as at the finish. I mean, because that I'm guessing can be saving you like, a handful or more of percentage points
Oh,
that
yes.
adds up quickly if you're doing, 7 or more figures in, for your exit. So it gets to be quite significant.
Yeah, absolutely. So there's two pieces to it that I want to talk about, the forming and then the selling. The forming, I just want to briefly mention that you don't necessarily need to get your structure right before the business starts. But once it looks like the business is actually selling, it's got a good amount of revenue, it's got good potential, then make sure you've got it correct. Don't necessarily go around forming C Corps all over the place or
And
limited companies or whatever it
yeah,
is.
and that's because you can get set up as one way, and then it's not that difficult to change it later on. You just have to make sure that before you're, I guess, entering the sale process, that you have that correctly solidified.
Yeah, most of the countries I work with have a capital gains rollover exemption of some sort, so that if all you're doing is changing the entity, they're not going to tax you on that. It's not like you're selling your business to the new entity or anything. So you've got a
Sure.
little bit of breathing room there, so you don't necessarily need to spend thousands of dollars before the business is even sold. And then on the sales side, like I've had a couple of clients that had their legal entity based in California, and then they sold their business and they thought, why did we do it in California? Ridiculously high
Yeah, and
tax
and,
rates
and, and
there.
that's and that's because the different states have different state tax or not. And so if you're, I know, like California, New York, I mean, you're just going to be paying state tax, and especially, and I mean, tell me if this is correct, but if it's an online business, if you don't have like physical roots in, say, California, you have some flexibility in terms of where the business is registered, so you could be avoiding that.
Yeah, it's important to talk to your accountant about that kind of thing because online business is fairly new and it's starting to get a bit more attention from the tax authorities.
Mm-hmm.
Like there's been a few things. They've realized that there's a lot of businesses on Amazon making a lot of money and they're not paying state taxes like they
Mm-hmm.
want. Um, so yeah,
So,
definitely. Like I'm not a tax accountant.
so disclaimer,
Disclaimer,
just
yes.
defer to your tax accountant for final for final confirmation clarification on these things.
Exactly, yeah. I mean, there's a couple of concepts that I can mention is just like there's your physical residence, there's the physical residence of your warehouse, there's the physical residence of your staff, and there's the if you haven't actually settled somewhere else, then technically your physical residence hasn't moved in the eyes of the tax authorities. Like there's a couple of concepts like that that even though you might be living in somewhere in Southeast Asia or in Latin America, for example, the IRS or Australian government or the UK, they might still think that you're home and tax you accordingly. So it's, yeah, definitely something to make sure that you clear with your tax accountant and be prepared for I'm not sure, but I think this is right kind of an answer because of how gray this area.
And with the accountant, which is short for tax accountant, so that's really like their realm is tax related filings and optimization. Is that,
Hmm.
I guess, generally speaking?
Yeah, you might also, there are people who will be employed as an accountant in a business and they're like a senior, very experienced, got a lot more skills than a bookkeeper.
Mm-hmm.
So they might do some higher level reports. They might make some payments. They might, run the payroll. They might manage a team of bookkeepers, that kind of thing. So it's,
Mm-hmm.
in some ways, it's like a senior bookkeeper type of a title as well. But for
Mm-hmm.
most of the people listening, accountant will mean tax accountant.
Okay. All right. So moving up the house to get into the fun stuff.
The fun stuff, yes, exactly. I've done bookkeeping, I've done tax accounting, and I was good at it, and I sold businesses that did it, but it doesn't really light me up.
Mhm.
The bit that I really enjoy, and I know you and I have had conversations about this in the past, is like the virtual CFO advisory kind of level. This level may include preparing forecast or forward-based reports like cash flow projections or cash flow forecasts or production forecasts, or what if we launched this product, kind of calculations in a spreadsheet. Anything to do with the future or what if scenarios comes into this category of the CFO, the profits coach, the advisor.
Mm-hmm. And so I mean that all sounds super useful, but just to make it as easy for the listeners to understand, like what are some of the benefits or use cases for some of these different projections, or like when would they come up and when would you need them and how are they going to help you?
Yeah. So something that's fairly common for an Amazon FBA seller is they might have this thought pop into their head from whatever source, like they've read a blog or listened to a podcast or something, and they thought, maybe I can get a better deal with a different manufacturer.
Mm-hmm.
And so then you kind of need to run the numbers of, all right, what are the costs that this manufacturer is quoting you? Go get a sample, obviously, to check the quality, but from a purely numbers perspective, like what are the costs? What are the minimum order quantities? What kind of delays between your order to when the product is ready for sale? And can you finance the supplier costs from your bank account during that time? What's the switchover from one manufacturer to another going to cost you, because you'll be paying bills from the old manufacturer while the new manufacturer starts up, and there might be some double up there. Anytime there's a large sum of money that might be involved, or a key part of your business that might be changing or hopefully getting better, you can run some numbers with an advisor that can tell you, all right, yes, you're probably not going to go broke if you do this. Worst case scenario, everything's going to be okay. Best case scenario, here's what that looks like specifically in terms of revenue numbers, margins, costs, all that kind of stuff.
Yeah, and that's some stuff like I'll say with you say like cash flow projections were something that I kind of, I guess, like stumbled into with my FBA business years ago. Through I had hired someone on my team who was managing the finances, and one day she just kind of like put together this like cash flow projection sheet. We were talking about payments, and she just like handed me this sheet with like the next, what is it, 3 months or something, kind of projected inflows and outflows. Like it was kind of a revelation. It was like I had no idea that like this was a thing. And I mean, for my business, when it was just getting started, and especially when it was when it was really growing fast, and I think something a lot of FBA sellers also struggle with is cash flow, and it's such a capital intensive business, and having that just like that clarity of when the money's coming and going and just what our situation was. It took a weight off my shoulders, totally like, a lot less stress, I'd say, as well, of just like, not wondering like, oh, I know we've got a bunch of payments coming up in 3 weeks or 6 weeks. And, are we going to be able to make them, or can we launch that new product? It was super. I was really glad to have access to them.
Yeah, I must admit that initially I hated them when I first learned about them way back then, when I was a little accounting student. When I first learned about them, I hated them. I'm like, why are we doing this? This looks useless. This is just like, it was a whole bunch of accounting theory to put together a report that no one is going to use. Like I was working in an accounting practice at the time, so the practical side of things was very important to me. Until it was, I actually used them on a real business, and I didn't do it the way that it said in my textbook. I did it in a way that would, it's got to be readable for the business owner who doesn't necessarily have accounting training, and kind of tying their revenue goals or their cash savings goals or the amount of money they want to pull out of the business goals, kind of tying that in, putting that in the cash flow, and then saying, okay, what amount of money are you going to have to pay over the next few months to actually hit your goals? Can you afford to do that? Do you then need to go get financing, or do your costs need to change? Do your pricing need to change? Once it became a bit more practical, I was like, yes, these things are amazing. Everybody should have one of these if they're running a business, but especially Amazon FBA sellers. If you're dealing with product, there's a lot of cash going in and out in larger and larger sums as you grow. And it's really handy to have that in front of you when you're making a really big transfer to a supplier overseas.
Yeah. Agreed. So yeah, I guess anything else on the projections that yeah, kind of like how they fit in, or how you use them with some of your clients or advised clients to use them.
Yeah, so there's two types, really. There's the cash flow projection, which I do on a monthly basis. And like I said before, not every client necessarily needs this. Like if you get paid before you have to pay any money out, then it's not quite as critical.
Mm-hmm.
Um, so a
It's
cash
that
flow,
positive float, or
yes,
kind of the opposite of FBA businesses, but is beneficial or could.
yes, exactly. If you have just you're selling from your own site and you pre-sell everything, I've
Yeah,
got a couple of clients that do that well.
great cash flow, as opposed
Yes.
to buying the inventory, selling it, paying the inventory beforehand, then it arrives in Amazon, then you sell it, then it's like 2 weeks or more that they hold it, and then they distribute it, and then it's more days. Yeah,
Yes,
not
exactly.
as yeah, cash advantageous. But
Yeah.
you're saying
So
the other type of projections.
so yeah, that's the one you do like your monthly columns, and then all the rows is the different cash going in and out, including like taxes and loan repayments and inventory movements, stuff like that. Then there's the other kind, which is like the oh dear, uh, my bank account is really low and I have a big bill coming up, or I have a lot of big bills coming up over the next 2 weeks. What am I going to do? And that kind of a cash flow projection, I call it like a micro projection. It's just literally a list with a date-based list of all the amounts of money that you need to part with and all the amounts of money that are coming out over the next 2 weeks. And at what point does your bank account go into negative, and how far in the negative are you actually able to go? That's like the panic slash micro projection is the other type.
Mm.
You can't really do that ongoing because it's too much of a pain in the backside to keep up with, even if you're delegating that.
And so what do you mean with like, oh crap, we need to do something immediately? So that's just like ad hoc if you realize that something's coming up immediately that you're not sure if you're able to manage, and then then it's just like you kind of build these projections from that day around whatever the crisis event happens to be.
Exactly. Yeah. Like a normal cash flow projection where you've got each column is a different month going off to the right into the future. That
Mm,
kind of projection is where you can test if the decisions you make now are going to send you broke in 3 or 6 or 12 months time.
mm,
Like hiring or investing even more in inventory or launching a new product, whatever it is. But this other one, the micro projection I'm talking about, is when your bank balance is getting a bit low and you're not sure that you're going to be able to pay everything over the next couple of weeks.
mm,
And
mm.
so then you literally list every single thing that you're going to have to pay, and all the amounts of money that are going to come in. You sort them by date, and you just very simple calculation to see what your bank account does after every single one of those payments in or out. And that's like a peace of mind thing to say, yes, you do have enough money to get through this little crunch, or it shows you what you need to change and what you need to move. Maybe you need to say to your supplier, oh, I need another week. Or maybe you need to go chase up some customers or wholesalers or distributors who haven't paid you.
It's like really getting into the nitty gritty, and looking at every item that can possibly improve your cast situation. Uh,
Yes. Yep. Absolutely.
all
Yeah.
right, so we got the projections. What else does a virtual CFO profit coach like yourself assist with businesses?
Yeah, sometimes it's just people want an extra set of eyes. Like they have a bookkeeper and a tax accountant that are putting together numbers, but they don't know what it means, and they're worried that it might mean something bad.
Mhm.
And so it's just, for some of my clients, I have a call with them once a month or every 2 weeks. We look at the numbers and I say, yes, everything's fine. And especially, when things are growing, or when they're implementing a new growth project, or when they're hiring for the first time or for the fifth time. Like, can I afford to do this? It's partly a cash flow projection thing, and it's partly a profits thing, and it's also like keeping an eye on the margin. So there's this element of not making sure that things don't go wrong in what I do, and what a good virtual CFO would do,
Mhm.
as well as considering what might happen in the future, and changing your plans accordingly. Does that make sense?
Yes. I mean, so it's both of like protective as well as expansive or like forward thinking expansive.
Exactly, yeah. And depending on the CFO, they might bias more towards that risk,
Mm,
protective aspect, trying to keep your risks down. Um, or if they're less of a traditional accountant like me, I'm more like, I want you to grow. I want you to get to
mm,
your goals. Well, make sure you don't go broke, of course, but
mm,
keep moving forward.
mm. And so what are some things that I know as a profits coach, and I know some of the work that you do and workshops that I've been a part of are about, finding more, increasing profit, finding more money in the business. What are some things that you look at for businesses that you work with, or that our listeners could or should look at to, we all want to make more money.
Yeah, yeah. All right. So there's a couple of key numbers that I suggest people keep an eye on. And there's only about five or six of them,
Mhm.
depending on the business and depending on the size of the business. I might add a couple more. Um, Revenue is obviously important. Without money coming in, without selling anything, you don't actually have a business. You have a lot of expenses. Um, you have a big credit card bill. Um, so sales is always like the number one priority, making sure that sales are coming in, making sure they're growing. Trending upwards is very important. But the caveat is important number two, and that's the margins, the gross margin or the gross profit margin, depending on how many words you actually want to say. I say it a lot, so I just say margin. And what that is, that's the cost of the product. So all the manufacturing costs, the raw materials, shipping it to your warehouse, shipping it off to your customer, those costs, any labor that you have to do or your team has to do to create the product and get it to the customer, all of those things compared to what you're charging for it. So price versus cost, and it's expressed as a percentage or as a ratio. So the gross profit is the price minus those costs I mentioned, and you divide that gross profit by the price or by the sales, and that's how you get this percentage or ratio. And it's the 80-20 of your business profits. There's so many businesses that somehow survive with really awful margins, but it's no real surprise that they're not growing. Because if there's not enough of a gap between what your product costs are and what the price you're selling it for, if there's not enough gap there, Amazon will send you broke with their lovely 30 odd percent fees, somewhere in that range. Um,
Got to be careful you're not making Amazon all this money and not not taking care of yourself.
exactly, yeah. You've got to have enough money for your own marketing to pay managers as your business grows and gets more complicated. Enough money to pay you, enough money to be profitable so that a
Mhm.
seller is actually interested in buying the thing later. Enough money for growth projects, paying down debt, savings, all this kind of stuff. You need those margins to be good. I'm very, very passionate about it, and I will rant for ages if you don't stop me.
So what are good margins?
Uh, for many businesses, I keep it simple and I say, whatever the cost is, you should charge at least 3 or 4 times that.
Mhm.
Or if you go out in the marketplace and you see people are charging a certain price and you want to be in that area, then you have to make sure your costs are less than a third or less than a quarter of those prices.
Right. So, and I guess like I mean, are there any like gross profit margin targets of like, I mean, 20% or 40% or like of what is, good versus uh, not good?
Yeah, so I'm kind of careful about when I say a percentage because some people, when they talk about the percentage, they're talking about what their costs are as a percentage of
Mm,
sales. And some people will talk about what their margin is as a percentage of sales.
mm, mhm,
So for me, I like to talk about the percentage as like the margin as a percentage of sales because we want that number to be nice and big,
mhm,
and the bigger the better. And for me, that's 66%.
mhm.
or 75%. That's that 3 or 4.
So that's so if your cost of goods is $5, then you want to be selling it at the sale price should be 15 or $20, which would be
Yes. Yeah. Ideally, if you want a large business with a lot of revenue and a lot of profit, and if you want to get involved with wholesalers and distributors, then a $5 cost turns into like a $25 price or even more.
Mhm.
Like that ratio needs to be really extreme if you want to get into like a big box store, because there'll be a lot of middlemen along the way, and that store at the end wants to make a huge profit too. So the
Mhm.
better your margin is, the bigger your business can grow,
Mhm.
because there's room for all these other people to sell your product for you.
Right, right. Yeah, and that's something that I think a lot of, is kind of lost on a lot of, especially, newer FBA sellers. It's like, oh, you just, I guess like lack of awareness of a lot of these metrics can get people into trouble. And it's easy to, you start and you're selling and it's, profitable but you're not really sure, how much. And then as things grow, like not having those strong margins can really make growth a challenge. You're going to need to, you can't grow as fast because all your cash is tied up, or you're going to need to look
Mm.
to outside funding. And so, yeah, we're super critical, starting on a strong foundation of margin.
Absolutely, yeah. If I find a potential client or a new client starts with me and they have a high margin product that is selling well, um, I just say, all right, I just strap into the rocket ship and off they go, because there's like, it's not just about, having distributors and wholesalers being able to sell for you and paying affiliates and that kind of thing. It's also like you have tons of money to market that product. Like
Mhm.
if you're selling a product for $25 and the actual cost to you is 5, then there's $20 difference in there. You can't spend the whole thing on marketing, but like that's a lot more than someone who's selling the product for only $10 or heaven forbid $6.
Mhm.
Um, and that's the thing I usually find with this. That's the big obvious difference between big Amazon sellers and small Amazon sellers is the margin. People who have been a small Amazon seller for a while, it's because their price is way too close to the cost of the product. And
Mhm.
Amazon is a bit of a red ocean, bloody water there, all the sharks. There's a lot of price competition, but you can actually sell for, you don't have to be the lowest price to be successful on Amazon, especially if you've got your own brand or you've got some sort of a competitive advantage with your manufacturing or your supply. So it is possible. And that's like the very passionate speech in short
Mhm.
that I have with smaller Amazon sellers I come across at like conferences and things.
Mhm. All right. So what other numbers should Amazon sellers or any business make sure they're on top of and monitoring?
Yeah, so revenue and margins, we spent a lot of time talking about margins because it's important. The others are a bit more self-explanatory. For marketing, I recommend spending between 5 to 15% of sales on marketing.
Mhm.
Now, for most people I speak to, they're barely spending anything.
Mhm.
But there are some people that are spending a lot, and those people are spending a lot because they're getting an awful return on their marketing and they just haven't noticed that for some reason.
And so that would be like Amazon pay per click. That would be
Yep.
so 5 to 10% of revenue. Um, a healthy business is like 5 to 10% is what you recommend
Hmm.
for what they should be spending on marketing.
Yeah, it will vary. Like there are some extremely competitive products or niches where you do have
Sure,
to spend
sure.
quite a bit more. But, make sure you can actually afford to play in that playground. That's expensive and
Uh-huh.
dangerous.
Okay, so then we got marketing spend.
Hmm. So the other two of the main numbers are profit. In a mature business, it's good to have 20% of your revenue be your profit figure.
Hmm. And when you say profit, that's net
Yes.
after everything. So the
After
gross
everything except taxes, yeah.
after everything but taxes. So
Mm.
whereas the gross profit is so that doesn't include marketing spend. That doesn't include like other admin related, or I mean, just other expenses that aren't directly related to fulfilling or creating the product.
Yes, exactly.
What you recommend or see as healthy is going to be 20% plus after everything.
Yes, yeah. So that's going to sound impossible for people who've only started their business or people who are growing really fast. And that's fine. That's why I said it's a mature business that's fairly stable, fairly secure position in its marketplace. Operations are good. It's got SOPs and it's got a team in place, that kind of thing. It's 20% would be to aim for.
Mm-hmm.
But for any other business, the key thing to aim for is, making sure you're getting a good return on your marketing and you're actually spending something, and then making sure your margins are correct. And then the final key number is how much you, the owner, is getting paid.
Yeah, let's talk about that. I like that one.
Yes, we all do, but it kind of in the busyness and in your desire to have the business succeed, it's like we can forget this number. And it's really, really important because if you're not getting paid enough, dear business owner listening to this, you'll burn out and you'll kill the business, or you'll walk away from the business, or you won't put the energy in that it needs. So it's very important to be paying that. It's like you wouldn't expect a rock star team member to accept less than minimum wage for all the hours they're putting in.
Mm-hmm.
Even if you're giving them some equity options, like they would not take the job.
Mm-hmm.
So you need to treat yourself the same way, just to make sure that, the main key resource of this business, that's you, is actually able to pay their personal bills, not getting distracted by money stress on the side.
Mm-hmm.
Now, if you have another source of income that's more than covering everything, then you don't need to draw anything.
Mm-hmm.
But I would still say make sure that your business is still profitable, even if you were being paid a market rate for the things you're
Mm-hmm.
doing in the business.
Yeah, well, that's something that I think isn't. I mean, I know as like, as an investor, or if you're, I mean, if you're buying a business that, I mean, if you're buying a larger business that has a, the owner operator, um, even if they're not getting paid a salary, like, aren't you supposed to? Well, I mean, I think aren't you supposed to, or aren't there some like rules around paying the owner or the whoever is running the business? So if it's the owner, they should be getting a market rate, because I mean, for different tax, there's tax implications of that. But then,
Mhm.
on top of that, if like someone's going to buy that business, then someone's going to need to run it, and like that. So like it's an expense, whether or not, I mean, if someone buys it, it becomes an expense, even if you're, running it yourself, or something like that.
Exactly. Yeah. I mean, you don't necessarily need to transfer the cash out. You don't necessarily need to record a salary. Like I leave the actual distribution and the way you structure it to the tax accountant. But my focus is making sure that, you have enough money to continue working on this business, but
Right.
also that the business is still profitable. Because if the business isn't able to pay you a market rate, that means there's a problem somewhere else in the business that you're not seeing and you're not dealing with. So like a common solution to poor margins is that the owner just works really hard and doesn't pull much money out, thinking that, oh, it's just, when I grow bigger, it'll be fine. Then I'll be able to pay myself. No, it'll get worse.
Mm-hmm.
It'll get worse. The more you sell, the worse it'll get.
Mm-hmm.
And so making sure that, the business is still profitable after you are paid a market rate for the tasks you're doing, like if you're working on the marketing,
Sure.
that will make sure that you're not ignoring other critical problems in the business.
And so what do you think about like profit first, or like one of these, I guess really it's just like a expense or profit taking kind of, or a budgeting system, right?
Yeah, I admit when Profit first came out and it started getting really popular, I got really angry about it. I got very ranty about it because people were thinking that, oh, I'm doing Profit first. That's all I need to think about with my numbers.
Mm.
And like it was kind of rubber stamping their desire to keep their head in the sand.
Mm-hmm.
I got really annoyed about that kind of thing. But I'm finding that the craze has worn off a little bit. It's a really good system. My problem was just that people were misunderstanding what it was for, and they were like abdicating their responsibility to look at the numbers.
Mm.
Um,
So they would just like blindly follow this system and then ignore like looking at their P&L,
yes.
because yeah, I see how that would be
Yeah.
um, not
Um,
ideal.
yeah, but what it is really good for, it's a really good budgeting and cost control system, because it prevents you from spending too much money. Well, not completely prevents, but it will make it harder for you to spend more money than you want to on certain areas of your business. And it also has a similar philosophy to me about like the owner should have money and you should set aside some savings, which I really like about it.
Mm-hmm.
So it's good in those respects, but it's not all you need, especially as the business gets bigger and more complex. Like it's good for a 5 up to maybe mid 6-figure business, but an Amazon FBA business that also sells on their own website and through distributors and wholesalers should not be relying solely on the profit first method.
Mm-hmm. Okay. And so is there like, I mean, when it comes to owner compensation or, I guess salary or profit for the owner, is there like, are there any rules that you kind of look at or follow, or is it basically like, make sure your needs are covered, factor in market rate, like is a good place to start or?
Yeah, so I like to think of the owner as having two distinct personalities. Like everyone's familiar with the analogy of there's many hats you wear in your business. You're the marketer, you're the manager, you're this person and that person. And I like to add another personality into the mix for the poor business owner. There's the business owner, the worker, the teammate, and that's the person that's doing the marketing, the person that's managing the staff. And then there's the business owner as the investor in this business,
Mm-hmm.
the person who owns this asset but could own a different asset if that was a better opportunity. That person, they get the profits. The profits
Mm-hmm.
are for them, distributions, or when the business eventually sells. That's the business owner that a lot of people want to work towards being. The business
Mm-hmm.
owner who's the worker needs to be paid a market rate,
Mm-hmm.
because as the business grows, parts of their role will be
Someone needs to
delegated.
fill that role, right?
Exactly, yeah. Because there'll be other roles they'll need to fill, or the role will become too big for one person to handle full time. And they need to make sure the business is profitable enough to be able to afford that.
Mm-hmm.
Hmm.
So let's see, what else can we kind of leave the listeners with, or kind of have them think about? Are there any like potential quick wins or things that they can, maybe do today, or what you would recommend, or stuff to look at of where they can, make their business more profitable?
Absolutely. The first one is a bit of a mindset shift for people who haven't been in business for very long, but maybe for other people as well, is that like what I do, I call myself a profits coach. I focus on growing the profits and making a big profitable business exit for those that want to do that. And I know you're of a similar mind and your business is good at that too. And one of the big problems I come up against when I'm trying to encourage people to be more profitable is that they don't like paying tax.
Mm-hmm.
And like, that's what happens when you earn more profits is like, I'm basically increasing your tax bill. In a way, and there's a mindset shift that people need to have, because otherwise, when they get their tax bill from their tax accountant, when the return's done, they go, oh no, this was a stupid idea. I want to be small again because I hate paying tax.
But also on that, I mean, there's a difference between tax profits and business profits of like.
Yeah, there's a common thing is like putting a lot of personal expenses through the business in various
Mm,
types, like either education and travel for business purposes and education, totally fine.
mm,
Speak to your tax accountant. But then there's like the next level of, putting your car through, even though you don't actually use it for the business, or
sure.
like pretending to pay someone that doesn't actually exist. Like we're
Uh-huh.
bending the rules a
The,
little bit.
at a certain point, it gets a bit egregious.
It does, yeah. And if you want to sell your business for a large amount of money, you cannot have those in there.
Mm,
Some sellers will want to compare the profit in the reports you've sent them to the profit you've actually reported on your tax returns.
Yeah, and that's especially with, larger transactions, or if I think that you even need that sometimes with, like if you're getting loans, they want to look
Yeah,
at your tax returns, right?
exactly. Yeah. So an investor or a business buyer or a lender, they're all going to want to see some big profits on there, which means that for like 2 years before you do that, you might be paying tax more than
Mm.
you used to, and not expensing things and things like that. So shifting that mindset to, I would rather have an extra $1,000 a week or a day of profit and pay 100, 200, $300 in tax extra, more than I'm
Hmm.
paying. Like I would rather focus on the amount of profit you get to keep, not the tax you have to pay.
All right, there you go.
And then just one other quick win, because
Yeah,
I know we're
yeah.
running out of time here, is software expenses are one of the things that kind of grow and stay there, and you don't use them anymore, or you don't have as many users as you feel like you need to, or you've transitioned to a new one and forgot to cancel the old one. Like, recurring software expenses is one way to quickly cut some costs that a lot of people just ignore, like things they're not using and they never actually will, so they should cancel it.
Hmm. Yeah, that's
Um,
one thing that I think. And I mean, yeah, like I know with my businesses, like software expenses creep up. You're like, yeah, I mean, I'm probably guilty of this.
Me too.
And like
We all
I
do
don't.
it. Yeah.
So looking through canceling software that you're not using.
Yeah, that's a big one. I mean, I've got more tips. There's a exercise in a short PDF on my website at profitscollective.com that will walk people through more of those. But one other thing that isn't in there that I want people to start thinking about as they listen is that I don't know if you've noticed this, but I've noticed this a lot, is that a fairly common New Year's resolution is, I'm going to get in shape, or I'm going to lose weight, or I'm going to get fitter, or I'm going to, some sort of body improvement one.
Uh-huh.
And the first thing people go and do is they buy a gym membership, they sign up, and then they don't go to the gym, and then they just don't cancel the gym membership.
So now
So,
you lose twice. You're not getting in shape, and you're paying
uh,
for a gym membership
yeah.
that you're not using.
So there's two ways that this applies in a business. Number one is, the things that you've signed up for that you don't actually use, like software expenses. But it's also keeping in mind that sometimes when we set a goal, for a lot of people, the first thing we do is we go and spend money. We don't necessarily do anything, but the first thing we think, our first place our mind can go to is, I need to go buy that thing, or I need to go sign up for X.
Mm.
Now, of course, if it's like you need to go sign up with me and be a client, then that's perfectly natural. You should do this.
Mhm.
Um, but for a lot of other things, it's just watching that reflex, because it's like with the gym, people think that by signing up for the gym membership, they feel like they've taken action. They feel like they've done something. And then they're like, the urge to take further action disappears. Like, it's like
Mm-hmm.
writing a plan can be dangerous because you feel like you've done the thing and then you don't actually take any action to implement it. Does that make sense?
Yeah, yeah, totally. And I mean, I'm guilty of this as well. It's like, oh, I'm, starting this new project, and oh, all right, I'll just go sign up for, this membership or this software, and then like, I
Yep.
mean, kind of loses momentum after that, and now I just signed up for these, yearly subscriptions, things that I'm not going to end up using.
Yes, exactly. Or there's like, they just so happen to be a good deal on an annual subscription. So you're like, yeah, and you spend that money, and then yeah, it's just a waste.
Uh,
So watching that reflex to spend money or do something that isn't action towards your new goals is an important nuance there
mhm.
as well.
All right. Well, that is, and this has been, yes, super useful. Covered a lot of stuff here. Is there anything that you want to leave the listeners with? Last tips and tricks or bit of advice?
Yeah. So there's like I said, there's that exercise to go do a quick profit check, but the most profitable thing you can actually work on in your business is your own mind, and your own attitudes to money and your habits, and more self-awareness and things. I know it's, some people don't like the woo-woo aspect of this, but if you always, a common example is that some people never end up hiring because they feel like they can always do things better and they're not happy with it being done substandard. And so their business never ever grows past their own working hours capacity. Like if you don't notice that kind of thing, that way of thinking that's blocking you from getting towards those growth goals you want, then it doesn't matter how many profit and loss reviews you do. It doesn't matter how many sessions you have with me as a client, like you will stop your growth. So always be watching out for those things that in our own thinking patterns and our own behaviors and habits that are sabotaging our growth and stopping us from getting to our goals. That's really profitable work there.
All right. I love it. It's the mindset stuff. I know it's like, I talk, not to go off on too much of a tangent, but I mean, with everything, it really starts with like, the belief and the mindset around whatever it is you're doing. And so, it's, it's important and impactful. So, all right. Well, Ben, I know we're bumping up against time, but thank you so much for coming on. This has been super interesting and super useful. I know for me and as well as our listeners. And so, if you can leave us with where to find more information, kind of what stuff you're up to, if people want help with some of these things that we've been talking about, where they can find you.
Sure. So on my website, profitscollective.com, there's that quick profit hunt exercise that'll help you find some quick cash. I've also got a Facebook group, imaginatively called Profits Collective. So that should be fairly easy to find. And if you go in there, there's some more expanded version of those, like quick exercise and a few other ways to increase your profits apart from just trying to cut your costs. I've got that in there, and I run the occasional Q&A where you can ask me questions a bit more directly.
All right. Well, that all sounds really awesome. Thanks for making that available. And thanks for your time and coming on and sharing with us today. Really appreciate it.
Sounds good. Been a pleasure as always.
This has been the Ecom Exits podcast with Nate Ginsberg. If you're enjoying the Ecom Exits podcast, show your support by subscribing, rating, and reviewing this podcast wherever you listen to podcasts. This will help other smart entrepreneurs find us. We appreciate your support. We have a new episode every week on the Ecom Exits podcast, so catch you next time.